we should wait till 4, sir, before we start allowing people come in.
Just to have fun doing this, okay?
Sure.
This is really me. I'm fed up of people talking, talking at people. So rather than that, the whole idea, if you think masterclass, what do I mean by that? Well, what I want to touch on is more for those, sourcing, okay? Like how did you find power, Paystack and others, assessing, doing the deal, and then what happens after. Those are, for me, the 4 critical stages that I'd just like us to talk through, okay? Yes, use Paystack, but it's not the only example we've got. Does that make sense?
Yeah, it sounds good. But there are some things on Paystack we won't be able to talk about.
Actually, we've canceled those ones out.
Okay.
Didn't you see Kola's teacher script? Where he said it to us like he says to his kids, "You will not, that is wrong. Why are you talking out? No!"
I'm sorry, I use PDF annotations. No insult intended, TD.
Oh, come on. We're just joking, man.
TD, I like your background. You even have your logo on there, your Twitter handle. You are doing this. This is all you've done all COVID time. You are optimized for it.
No messing around, though.
No,
It's
what happened?
It's almost 4 p.m. Should I start allowing?
No, we said 4 o'clock now. We still got 1 minute. What did your last slave die of? I beg now. I haven't seen these guys in a while. COVID has caught up, Normally we would have seen in one function or the other, taking ourselves to the side and have a proper chat, but we've not had that privilege. So what I'm hoping to do is use today for that. And really, it's time. So let's go. You can let people in.
Well, you can hear me clearly, right?
I can hear you loud and clear. Kola, we can hear you too.
Fantastic.
Okay. And so, like I said, really, if you're in the audience and you're not a startup or an angel investor, you should get bored and leave. That's the whole idea. But if you're either of those two, then the conversation I want to have with the two of you is really as the journey we take each time, soups to nuts as angel investors. And what's brought that to life in the immediate recent past is the fact that 5 years ago, both of you took a bet, and that bet came true in front of everybody's eyes in October when Stripe acquired Paystack. But I know for a fact that one of my friends put it this way. Let me find exactly so that I don't misquote what she said, because it's a good starting context for today. What she said is, when she saw the flyer for our conversation, says, "This is very interesting because doing business in Nigeria takes the special grace of God." And I told her, I says, wow, that is a powerful opening. So let's start from the beginning. How do you find these guys? Olumide. Okay,
I think we started out investing in 2014, so very, very early, when the whole Yaba ecosystem was being built, when it was just us starting out with a call for entry for startups that we wanted to invest in. So we had the same accelerator type model, bring startups for 3 months, and then after 3 months, put them in front of bigger investors in a demo day format. But we quickly found out that didn't work, because even after 3 months, it's you that would also put more money inside those same startups, because there were no investors down the line to pick that up. So we quickly scrapped the accelerator type model and started doing typical not the call for entry, but sourcing deals or deals finding us based out of the initial word we had put out. So I think the accelerator type model that we started out helped, even though we scrapped it, but it helped us put some word out there. That's how we found the piggyvest thing that was initially Push CV that became
I
Piggy.
remember.
Yes.
Yeah.
So
I remember them as piggyvest. I'm sorry, as Push CV.
Exactly.
Yeah.
So that's how that started. And I think obviously doing one deal and then the ecosystem is small, people talk, and then so the deals start finding you after some time.
Kola, I mean, you were sat up in Abuja doing a storm. I mean, how did they get to know you exist? How did they find? I know it was, for me it was easy, but how do you source?
So to be honest,
and how do you decide? Yeah.
Yeah, to be honest, I mean, very, very similar to Olumide, we started off, also with an accelerator. I remember when I decided to formalize, really start investing, I went around and spoke to everyone that had tried to formalize their investing. I spoke to Jason, I spoke to Olumide, I spoke to the guys, a bunch of people. I spoke to Bosun, and, everyone, pretty much said, said, don't do an accelerator. It's a bad idea, but for whatever reason, I felt, what, I'm going to make new mistakes, would experiment with it and we'll see how it goes. And, we started off and we did 2 batches of that. It was an incredible experiment. But I think the biggest takeaway, and by the way, we still do accelerators. It's only that we only now do corporate or branded accelerator programs, right?
Mm-hmm.
The biggest takeaway for us was, like Olumide said, was that you end up accelerating these companies, but everyone that comes at demo day pretty much just invests by talking. There's really no check writing, a lot of check writing that happens. And you're going to have to still back those companies yourself, and so, but we were fortunate with a few things. I think one, we somehow, a couple of the companies in that first batch, turned out decently. But we also, I think we were also very clear with our early communication in the sense that, we were very clear that we wanted to be founder friendly. We wanted to be, and again, my definition of founder friendly has evolved. If you spoke to me a few years ago, I was probably super optimizing for the founder, but my definition of founder friendly is somewhere in the middle. You optimize for the founder, but you also protect investor interest, right? And it's balanced, and the stakeholder interests are essentially aligned. But I think that early visibility of our sort of openness, I think we came out of the gate announcing 20K for 10% in Olumide, remind me, I think this was 2015 or 2016. Yeah, 2015.
It was 2015.
Yeah, 2015. And I got text messages from people telling me, what the hell are you doing? You're going to spoil the market. This valuation is too high, But in some way, that helped build our brand early. And I would say when I look back, I've done 52 deals now since then, between ventures and my angel portfolio. 90% of the deals I've done have come from the portfolio. So that is founders themselves referring founders. And that speaks to the strength, of the relationships we build with the founders, because, the ecosystem is so small. And like Olumide said, people talk. So between Olumide and I and the ventures platform brand and system, there's so much happening. I mean, the decks move really fast, right? And
I can attest to that. I think I've been up to Abuja a couple of times, and I was one of the early visitors at Lead Pack. I still remember on Olono Day.
Yeah. Yep. You were one of our first believers and supporters. That's why if you call us to come and do a fireside at 2 a.m., we'll answer.
So, well, I mean, we thank God we're still seeing deals. So sourcing, I think for all of us is less of a challenge. than it used to be. I'm not saying it still isn't a challenge, because we go through quite a lot of draws to get the one or two that you say,
Sure.
hey, Olumide, have you seen this guy? But that's sort of the next step is, let me ask it boldly. Do you have a thesis you work against, for example? Or is it just gut?
Yeah, so there's a few things for me that are red flags, right? I mean, I certainly have a thesis, but in terms of a thesis I work against, there are a few things that are red flags for me. If you spoke to me a year ago, I would tell you that I wouldn't bet on e-commerce, and we were sort of counterculture. There was a time e-commerce was the rave, and everyone was, but my view was, we're not there yet. You've got to look at a digital economy as layers, right? And I felt, at the time, when we backed Paystack, Paystack was like that, the right stage for a digital economy. In my view, you needed to sort out payment infrastructure, logistics infrastructure, credits. All of these building blocks are critical before you can build a cost-effective, capital-efficient e-commerce business. And so I've always sort of felt, I've always had a thesis against that. We dabbled in gaming very early. We invested in 2 gaming companies, and I quickly learned how difficult it was. I mean, yes, the audience is there, but monetization is extremely difficult, right? And so I quickly built a thesis around.
But by the way, what's the name of the young team? They hung out for a while. The Downfall guys, they ended up at Paga.
Yeah, Chop-Up.
Chop-Up, thank you.
51, yes.
There you go. So
Pledge 51, yeah.
Yeah, there you go. I mean, the other things that I built a thesis against but quickly evolved was, because of a bad experience early on, I decided that I would never fund a team that had a familial relationship, so married couples or siblings. Because we had a nasty experience. TD, you might have met this team. We funded this team that turned out they were dating, and when we were doing when we were doing the accelerator, it was almost like we were doing Love Island or something. But after that, we backed MDAS, Shoga, and his incredible wife. And they've proved me wrong. So, you keep learning as you go and modifying that thesis. Olumide, I don't know what you think.
Yes, I think for me, it's, I've tried in the early days, I've tried backing some, because I always had this play of looking at the Indian market and then saying, okay, maybe the Indian market is probably a couple of years ahead of us. So let's replicate some of those same verticals. So I'd always had this thinking that, okay, we had the general e-commerce plays, and then I figured that there will be some niche e-commerce plays, especially around fashion or even specialized for shoes. So we backed heels.com.ng at the time. We backed fashpa.com, and I figured there would be some place for that niche e-commerce play. But then, like Kola rightly mentioned, I think some of the funding, even in that whole ecosystem, probably went into building out the wrong things. I think figures about how much some folks were spending on even Google ads per day. So that didn't turn out so well. But generally for me, it's there's some gut feel about me liking the person first and liking what the person is doing. After that, I'm just backing that guy. We've had founders who, for example, we've gone on to back. They were doing something in the health startup space with Meditel. I liked Inka a lot. It didn't work out, and he moved on to do something else, which we also ended up backing. So it's usually about the guy for me, or the girl.
Okay. So here's a question then. What was it about Israel?
Shola and Ezra.
Shola and Israel, yeah.
Yeah.
Shola and Ezra.
Okay.
Ezra and Shola. I meant Ezra, yeah.
So I'll tell a funny story. And Shola, thankfully on a Tech Cabal event a few days ago, Shola actually spoke about this. It was one of the fastest checks I ever wrote. I think I met Shola once, and I cut the check maybe in 2 days or something. Now, I don't do that anymore, right? Obviously, because with Ventures platform, we've become a lot more formalized. There's a lot of DD legal. And at the time, I was only investing my own capital, but now, we invest, we have a fund.
Yeah, fund, yeah.
But it was the clarity of the problem and the fact that there was so much he knew about the space that I didn't know. Now, mind you, I was, I had a operating software business. And so we would very often have to implement payments on different portals we were doing. So I knew the problem, but there was so much he knew about it that even me as an industry, so to say, expert didn't know, and so for me, I mean, and Shola was just obsessive, he was just obsessive about really executing. And the timing was right. The pain point was very obvious. One of the things that we talk about at Ventures platform is, or generally that I talk about is, I am looking for positive offline indicators for any online or digital business. And because I knew clearly the pain points of how long it took to set up a payment implementation, how unstable it was, it just clicked, and plus everything Shola knew was super compelling. And I'll add one more thing, is humility it just shone through. And that humility still exists today. I'll call Shola out just out of the blue. Shola introduces me to a founder, Olumide, I haven't told you this, a couple of days ago. And, the founder responds by sending me a Calendly link to say I should book a time on his calendar. Now, I didn't take it as anything, right? I mean, it's 2020, COVID, and we're all hi, hello. So I copy my assistant and I say, she'll find time on your calendar. I look forward to meeting you. And Shola sends me a WhatsApp. Can you imagine? The guy sent you Calendly. I've talked to him. I'm really sorry. I was shocked. Like, this guy, after 200 million, this guy is still the same way he was. So that says it all about Shola. That says it all about him. Yeah.
For me, it was,
Go ahead.
For me, it was, I'd known Shola before Paystack, so that was easier. So in fact, Shola's name on my phone for a while was Shola Klein Devon, not even, because that was what he was building, his earlier company where he was building Procurio. So because of Blue Chip, my enterprise company, we collaborated, and someone has brought us together to collaborate on some projects before. So I already knew him, and I knew his technical ability. That was one. Two is OO also what's about what Shola was building, OO Nwoye. And if you know OO Nwoye, we call him the Clarence Evans of the tech ecosystem. So once OO sends you a deck, there's no need looking at it again. There's no need, because he's looked at it, he connects the dots. I call him the plug in connecting dots in the market. So I already knew Shola, and I knew what he had built before. It came from OO, and it was very early. And then I think I looked at when the Paystack deal closed or was announced. I went to look up for my first ever email, or Shola's first ever email to me, just pre-YC. And he had even sent me a link to say, play around on the site. I think the first company integrated then was Gingerbox, that was helping deliver fruits. And was play around on the site and let me know what you think. And then we met, and then yes, that was really it. So it was, I knew the guy already. We had a history because we tried to work together in the enterprise space. He had come from OO, and it was quite easy.
All right. Now,
I have to add that OO did the introduction for me as well. I must add, I think OO features significantly in all of this. And guess what? I was smart enough to pull OO onto our board, and so I get to see all of his.
All right, cool. That is so cool. I mean, again, to me, sitting here looking at all of this unravel, and you guys know I've been sat here for a while. You can't imagine what joy it is knowing all the characters and seeing it evolve. But here's the question. Were there any concerns at that time? Did you feel, well, maybe any nigglings at all? I mean, did you negotiate? Was it, it was a straight slam dunk? How did the mechanics occur, in terms of how much do I get? How much do you need? OO had sorted all that out, or did you guys have to do something?
Okay. If the way I think about investing, and maybe because I'm doing a lot of more angel investments, so I'm quick to decision making than maybe a typical fund structure would be. For me, it's and I tell people who tell me, because some people see deals we've done and they're like, hey, Olumide, next time you're investing, you need to let me know and let me put some money in there. And I'm saying, okay, if you lose 15K, what happens to you? Would you still pay school fees tomorrow?
Exactly.
So for me, I invest in the companies, especially at very early stages. It's money that doesn't kill me, right? It's money that doesn't affect school fees tomorrow, or affect food on the table down the line. So if I've made up my mind that I like this guy and I like what he's building, my ability to write a check or my timing to decision is very, very quick. And niggling about valuations and so on, for me now, we're all optimizing for the upside, right? So if it ends up working, it's 1 or 0. If it ends up working, my 2% or 3% is fine. Even if you negotiate for the upside, or you at the initially for the upside, and you're talking about, hey, I need a 15% play now. If this guy ends up not building the right thing, what value does the 15% count for? So for me, it's finding that comfort to invest even in the first place, and finding the right amount that's not going to kill me.
Now, Kola, I have, and I know I can see them in the audience. I have people who've asked because they've had negative experiences with founders who've they feel have either lied, cheated, stolen, done all manners of untoward things with their investment, and the sense is that this due diligence process or this whole thing gives them some kind of comfort. But what are your thoughts? Because now you're dealing with LPs.
Yeah, I mean, I think it's a really good point. So my process has evolved so much that when I do a deal as an angel, I wear a different hat. And when I'm doing a deal as VP, I wear a completely different hat. And
All right, share that.
It speaks to the quantums of the capital. So Olumide and I do a lot of our angel deals together. And Olumide is also invested as one of our LPs. And he knows very well that when I'm doing a deal as VP, we take our time. But there's an expectation that the founders have. I think founders generally expect that when an institution is doing a deal, there's probably going to be a lot more scrutiny. And so there's generally more expectation of that, because on the scale of balance, the velocity of capital deployment has increased significantly. And so we're all competing with people sitting in Silicon Valley that are not doing any diligence, just wiring the money. And so if you over optimize for trying to cross all the T's and dot all the I's, you're not gonna get into deals. I'll tell you that there's a deal we really wanted to do recently. Despite as fast as I deploy capital, we basically missed out on that deal because the founder said, look, we're oversubscribed already. And so for us, what we've been able to do over the years is really standardize our processes to where we're able to upfront a lot of, our terms and, sort of our conditions in the early stage of the conversation. We have a very standard DD template, right? And the founder gets the DD template and they're able to fill that out very quickly. And a lot of the back and forth gets sorted out in side letters, right? And so the side letter is often shared. But we are super optimizing for speed because, frankly speaking, I would rather the founder spend the time building the company than haggling on terms. You know, I mean, it can be so unfair, and maybe because I've raised money before as a founder myself, so I understand the pain. I understand how annoying it is. I hate fundraising. I mean, I had one of my LPs tell me a couple of days ago, like, Kola, you're not good at fundraising. I'm like, yeah, I'm not good at fundraising, but I'm good at deploying capital and identifying. You know, which one do you want? you know.
That's it.
So because I hate fundraising myself, like I'm super committed to making the process as easy as possible for founders, and I know that doesn't necessarily speak to the fact that you're going to run into some bad founders, right? Now this is what I've learned to do. One is I do a lot of social confirmation. The moment I meet a founder and I'm interested in backing them, I am working my network to find out who knows them. You know, so you know, in the last 6 months, we've backed 3 ex-Paystack founders. You know, and they talk about the Paystack mafia, right? And you better believe that I was reaching out to Shola at each point. What did you think about this guy? You know, I'm reaching out to his team members because I've backed some of his team members before. And, you know, that speaks volumes to me than any model, anything that he can, because at that stage is really about the individual. As Olumide said, we backed a founder, company didn't perform. We ended up hiring him. He's on our team today, you know, so no love lost. I mean, the guy gave it his all. So I think the biggest takeaway I hope people take away from this segment is, I think there's too much optimization for the downside. You know, people, rather than optimizing, trying to protect the downside, let's optimize for the upside. You know, speed. Again, in terms of haggling, what I've done is we've determined our max entry valuation. And so if the valuation is below my entry valuation, it's just zeros, right? I mean, anything below my entry valuation, I know I'm going to make money. And so I'm not too headstrong on whether it is 2 million or 2.5 or 3 million. I mean, I want the best deal possible, but I want to go to war without shedding blood. In other words, I don't want to get a deal that is so good that the founder feels is working for me, or a deal that is so good that, you know, it becomes difficult to raise at the right valuation on the next round. You know, so, you know, a bit of give and take there.
Okay. I think if I would quickly add, CD, is
deal terms.
I think it's also how does the deal come, right? So if I get a deal from Kola, or if I get a deal from OO, for example, you believe that there's some diligence that's already been done on this deal. So you find out that, for example, if you look at what Aina is doing with Future Africa, the investors on that platform are relying on the diligence that Aina has already done.
Correct.
So they are not going forward to go ahead to start double bidding those companies, and then which obviously leads to that whole time wasted or time to decision making taking a longer period.
Let me shock both of you. Let me shock both of you with a little bit of statistics. I actually gave it this morning. How long on average do you think it takes a startup, okay, on the continent to get a term sheet? Roughly.
I'll probably say average would be unfortunately, about 3 months.
Olumide?
Yeah, something between 2 to 3 months to
20 weeks.
So that's what, about 5 months.
Nah, man.
Scary, eh?
Yes.
Now, we give a yes or no answer in 2 weeks from first contact.
And that's exactly why we're having this chat, is so that others can start to understand the dynamic. That is yes, Paystack is a good example, but remember, I'd had this conversation with you before Paystack even hit, where I said I want you to come talk to the syndicate and to the network, so they understand the need for speed and the fact that at this stage you're actually betting on the individual, okay, rather than on anything else they're saying, because everything else is hypothesis, even if they've got a little bit of money coming in. But let's move ahead a bit. Post the deal, how involved were you guys with Ezra and Shola?
Okay, I think that's where having foreign investors investing with local investors becomes very, very interesting. And where obviously we urge foreign investors to also have locals tag along. I think in terms of regulatory and stakeholder engagement, Kola and I were quite involved in dealing with the central bank with Shola several times because obviously someone from Silicon Valley is not going to be able to call the director for payments or calling the deputy governor when you're trying to get things done. So yes, the level of involvement was around some stakeholder engagement, regulatory engagement. But then at the end of the day, Shola is running his own ship. His team, he has built an excellent team around him. And then he's obviously being there for advice, being there for support on how he's thinking about a certain problem. And then, like I said, that regulatory and stakeholder engagement, I think were the key parts around on the Paystack.
Fantastic. Well, that, you see, again, to me, what you guys are describing is classical angel investing, or best practice and top notch. But Kola, what was your role?
Yeah, I mean, like Olumide put it, I mean, pretty much, very early on, the relationship dynamics was set, and I've used the Paystack model as pretty much the model I use with all my companies. So the moment I do an investment, I set up a WhatsApp group with all the founders, because what I tell them is I'm on demand. You can call me, you can reach out to me at any time. And my angel investments and my VC investments get the same level of access. I'm not looking to meet with you every month by default. I'm only looking to meet with you when you need me to meet with you. So if it's 2 a.m., you can reach out, and so there's a lot of regulatory work, behind the scenes, particularly. My job is to open my Rolodex, bouncing ideas off of me. And Shola was really good at that, but he has to get all the credit, because for me, I tell people this all the time, like, I'm not looking to back founders that need me to survive. I'm looking to back founders where my involvement becomes like fuel on fire, right? And so it's really about backing winners, right? I mean, I'm sorry, because, this is when it's not charity, right? So my job is to identify the folks that I can work with, and, which is why for me, if I only had one question to ask or one thing to confirm, if I only had enough time to confirm one thing to make an investment decision, that one thing for me would be, can I work for this person? Could I work for this founder? And once I confirm that, it makes opening my Rolodex, it makes making myself available really easy for me, and trusting the founder as well. Which is why I would never tranche an investment, because it never ends well when you tranche investments. And I salute people that do it, but it never ever ends well, because the forecast will never play out like it was forecasted. And that's when all the dirty, all the long conversation begins.
That actually brings an interesting question to mind, because okay, Kola, you're a senior player, 40. I think I'm probably at about 22 in the portfolio. But how does Paystack hold up against the others in your portfolio, and how do you do that balance in terms of do no evil? I mean, I've had situations where, unfortunately, I've had to say no, even though a semi-performing member of my portfolio was in the space. I mean, how do you handle portfolio diversification and management? Olumide.
So if I understand your question, you're saying investing in the same companies in the same industry, or generally?
Well, I just, you've got a portfolio of how many now?
Probably about 22, 23.
22, exactly. So how do you juggle that against inbound new deals? Is there any relationship, or you're not really concerned about the dynamics of the portfolio? I ask because, for example, Big Cabal is one of mine, and half the time I'm telling all my I'm sending all my founders there, only for Tomiwa and Tayo to have a spat over this weekend, and I'm trying to juggle between the two, and all. So it's that's what I mean. Is it's do you guys get involved in those kind of things?
I think it's two ways, right? When it works well, it's very, very nice. Okay,
Yeah.
so for example, PiggyVest, who were the first investors and significant investors in, obviously are powered by Paystack, right? So, and you see them working together a lot. You see the PiggyVest team talking to Shola about how he thinks about hiring and so on. So when it works well, it's amazing to watch. But then when there is infighting, and then you have to call the village square meeting, and that's where it helps to be able to say, hey, this is how I see it from my point of view. And then you stand like that arbiter in between any of that happening. So in terms of obviously how the Paystack investment stacks amongst the portfolio, obviously it's one of the winners, and then obviously it helps. It also helps in getting further deals down the line. So in terms of my appetite for new deals, Kola and I are probably on WhatsApp every day sharing different decks on deals that we're looking for, and it does come from even some of the companies we've invested in, like saying, hi, I get a mail from some or those saying, hi, so we talk to this company, I think you should also look at them, and we go ahead to invest in some of those companies.
Interesting, thanks. I mean, Kola, your challenge is slightly different to Olumide. If I can, Olumide, myself, and part of you, okay, don't have the other challenge you have. And what do I mean by that? Me, I write my own check, so I can tell anybody what to do and where to go. And that's why I hate to admit it, I've never raised a fund, but it looks like I'm going to have to do that with my new partners. But that's a different story. How do you juggle that portfolio? You said now all portfolio members get the same level of access to you, but how do you balance that between personal interest as an angel investor, and then you've got your VC hat you're wearing too? You're on mute.
Pretty simple. My son walked in there, so I needed to mute Daddy and son talk.
The boss.
Pretty simple. So first off, my investors know that. So first of all, we have certain exclusions. So for instance, ventures platform would not invest in gambling or certain things that fall out of our exclusion lists. But I, as an individual, might decide to. And so as a first rule of thumb, as long as the deal falls within our stage, check size, valuation size, because we've got very clear valuation and stage sort of guardrails, which are set by me and the team and endorsed by the IC and the board. The moment the deal falls within those parameters, ventures platform gets to see it first. But I'll give an example. There's a case where ventures platform passed on a deal. Olumide, this deal, Rise Vest. Because ventures platform has grown beyond just me, Kola, there's an investment committee. I was super convinced that it was a deal to do. The investment committee passed on it. I couldn't convince the IC, even though I could force their hand if I wanted to, but I like the IC to work. And, I was convinced that the deal was a good deal. And so, the investment committee passed. I went ahead and did the deal. Guess what? A year later, ventures platform did the deal at a higher valuation. Right. at a much at a 5x valuation, by the way, 5x.
All right.
Yeah, I mean, still within our valuation band. So everything is at arm's length. But I think one of the most difficult things I've had to contend with is because our market is so shallow and because we're investing so actively, is at what point do you invest in competing companies? And something that we still don't have a perfect answer to, but the closest we have is the closest answer we have at this point is that we won't invest in two competing companies that we want to invest in two competing companies that are in the same market and at the same stage. We might see corollaries, or we might see that the business models might converge in the near term. So as an example, RiseVest and Trove. At the time we invested in RiseVest was doing managed portfolios, and it's still doing managed portfolios, where Trove is doing self-directed investments. But there is there's a very real possibility that in a year they might converge. Well, we'll see that happen. We invested in Crowdforce when they were doing data collection. We had already invested in Kudi. Today, both companies are in the agency banking space. And so, you've got to just sort of have your rules and your guidelines. The best part of it, though, is when we do an investment, part of the onboarding is we introduce the company to the ventures platform family. And it's such a beautiful thing to see. Without our involvement, you start seeing emails, oh, I'd love to integrate with you on this and this. Is such and that is such an incredible thing to see for me. Like, the founders themselves do the work, and you see the portfolio itself working together, making the sum total of the value even more significant.
Yeah, and you see, truth be told, what both of you may not know is we tried out, the acceleration at TVC Labs. We were quite successful. We were doing it in Singularity. We were quite successful with Sproxel, and then lost our shirt with Slim Trader after they raised over $1 million and couldn't go any further. So I also learned that the very hard way. But here's the rub, or one of the questions. How do you know? I take a look at Paystack now. How do you know it's the right time to exit?
I think the question to ask yourself is, if 3 years ago or 4 years ago someone had said they would give you 30 times this money, would you take it? If the answer is yes, then obviously go ahead. But I think for me, is there are certain companies that you're close to, and these guys are building a rocket ship, right? And but then there's also money on the table. So I remember saying, an investor told me that when the goddess of wealth comes to anoint you, you do not say you want to get ready for the occasion. You accept immediately. So when that goddess of wealth comes, you need to accept and take what's on the table, and then find ways to say, okay, I want to do a partial exit, for example, because I believe these guys are building a rocket ship. I'll take money off the table at this point, which I always advise everyone to do, and then leave some on the table, because I believe these guys are building a rocket ship. In some instances, you don't have that choice because you're a minority shareholder, and that decision is made, which is a good decision anyway for you, because like I said, if 3-4 years ago someone had told you that you would make a 30x on an investment or a 50x on an investment, you would have taken it.
I agree. I mean, because I remember similarly 2008 when Media 24 came and took 50% of Strike. I was like, you mean they're actually going to pay us real money for this? And I have to tell you, 3 days. It took me 3 days after that check hit the bank account for me to believe it was real. I first thought they'd made some mistake, and all of that. But now they sold it to Disney, and I'm feeling yay.
Don't think about it.
No, I'm not even going to go there. But Kola, what are your thoughts? I mean, is there ever a time to exit?
Yeah, I think, again, because, I sort of miss the days that I was only investing my money, and sometimes I wish I would just go back to that, because there's too much responsibility running a fund. Olumide, you know what I mean?
Sure.
So, when I'm as an angel, honestly, I'm not in a hurry, because like Olumide said, I'm not investing the money I need today. So I'm happy to just ride the wave until, there's a liquidity event, and very often you would know, right? The founders themselves will tell you, or I mean, there are companies where I've gotten approached with folks that want to buy secondaries, right? But with my fund, we actually have a rubric. It's very scientific. So we say there's a ratio where if the valuation is X number of the total portfolio size for the vintage, right? The vintage obviously is the fund that invested in that company. So say this fund invested in 10 companies, and the value of our investment is, and I won't give off the number, is 7x, for instance, 7x the size of the fund. That's the signal that we need to start looking for exit opportunities. And there's two companies, for instance, where we're actively doing that today. And even though those companies might not be acquired, we would then be open to doing secondary transactions. Exactly. And so it's really about tracking we've reached our exit benchmark, right? And looking for the liquidity opportunity.
All right. Thanks. I mean, so let me what I want to do is sort of summarize, the discussion so far, and then some people have started putting questions in the and if you have questions, please put it in the chat, which I want us to touch on. But for the angels there, first of all, what you're saying is on sourcing, get a reputation. That's what I heard. Sure. Because once you have a reputation and your thesis is known, then the investment-worthy companies sort of come find you. But you've got to put yourself out there and do some investments to earn that reputation. On assessing at our stage, it's all about the founders. Yes, the paperwork's important. All the deal mechanics are important, but it's about the founders when it comes to assessing. And what I heard in doing deals is the faster you can write a check, the better off you are once you've made the decision that you want to go with it. Let the paperwork flow subsequent. And sure. And on post-investment, it's about adding as much value to the portfolio as is possible. Can you sign up to that? Because that's what they're going to put against our names. That was the summarization.
Fully endorsed. Fully endorsed.
Okay. Now, what we've got are some very interesting questions from the audience, which the first one is for you, Kola. What's the minimum commitment size for the VP fund? Is your funding in dollars, and given the exchange rate crisis, how are you determining which rate to apply? Now, I want to broaden that question, okay? Because, the reason we all did Trove was because we see this currency issue magnifying. I think in the next few days, they're going to announce yet another hit on the Naira. So, and all funds are denominated in dollars. So if the startup doesn't have an export potential, okay, to mitigate FX risks, what's the story there? So minimum commitment, and then, given exchange rate, how are you doing? How are you determining? Kola.
Wow. Thankfully, I have Olumide on this call, so he can bail me out. The last part of the question is actually my biggest conundrum at the moment. The FX issue, right? I was following a discussion on Twitter yesterday between some of our founders, the founder of Kudi, making a joke about changing his reporting currency from dollars to and I was going to comment, but I said I shouldn't comment before he thinks it's a subliminal message, since he's a portfolio company. So first off is, as a fund, our initial check size ranges anywhere between 20 to 250K. For LPs, we take LPs with minimum check sizes of 100K. Obviously, for some strategic reasons, we can have conversations around lower check sizes. Our investments are in US dollars. And to date, we have used the parallel market rates, the black market rates.
Kabuki FX.
Yeah, essentially. Because we think that is more indicative of the reality of the market. And we think that, I mean, we know that there are certain VCs that use the CBN rates, but that's, in my view, that's just unfair, right? Because half the time, these companies can't get that rate, right? If they want to buy the US dollar. And so, again, I've said I like to be founder friendly. Do with that what you may. I think it doesn't pay out in the short term, but it does pay out in the long term because, if you do the right thing long enough, you will see the right deals. And if you don't do the right thing, you get crowded out of the right deals. Because I want to do this for the foreseeable future, I'm focused on that. In terms of how we are going to deal with the FX issues, it's a real challenge. There are a number of things that we're doing. One is just from a business strategy standpoint, we are advocating for sort of regional expansion. So how do you minimize the Nigeria FX risk by expanding your business beyond the shores of Nigeria? Obviously, unfortunately, Nigeria remains the 10-pound gorilla in the continent. But we will continue to say, look, you need to look for other markets to balance out the Nigeria risk. There's a couple other things that we're still evaluating, but I've got to hold that. Hold some of those to my chest because they're still very strategic. But Olumide, happy to get your perspective on this as well.
Yeah, Olumide, what's your take?
I mean, it's Kola hit the point in saying that the reality is the parallel market rate is more indicative of what the market is. So you're best adjusting to that. So I've seen, for example, when some companies start reporting more in Naira, or used to report in dollars, and then start reporting in Naira, then you know why, because a company that was processing, say, $1 million and 280 million Naira before was saying it was processing $1 million, and now it's probably even grown by 10%, processing 410 million Naira, but then it's now less than $1 million. It's now less than $1 million in terms of actual growth. So you would always find those problems in a country like ours that has a soft currency. So you find out that startups need to now start doing more in dollar terms. But I also feel that we need to start thinking about, and I was speaking to Dotson earlier on today about this concept. We still need to think about companies in Nigeria, the companies here who are generating enough cash to even start paying out even some form of dividends to and I know it's not something that's very popular in the venture space, but then you're saying that how many of the Paystack exits are we really going to see in our market, right? It's not happening. It's not happening once every quarter or twice every quarter. And so there's this whole tendency to think about, oh yes, we need the next big raise in dollars. We need another big raise down the line. But then some of these companies need to optimize where possible, let me add that, for profitability scenarios where there's even some payout to investors, even while the business still can grow. And that payout to investor can happen in Naira, in dollars, and if it happens in Naira, the investor can dollarize and hedge against further valuation down the line.
Well, there's a take that says in the short term, these local currency declines could see more attractive valuations for companies that had hitherto been viewed as overvalued. And that may lead to opportunistic investments. I mean, what do you think?
Yeah. I think we even saw that, with COVID, to be honest. I mean, when the pandemic hit, which was why we launched with Acumen the Impact Startup Relief Fund, because I was sincerely worried that we would see a slowdown in sort of early company formation, right?
That's why I did the same with Digital Africa and Propaco.
Exactly.
Fund. Yeah.
Exactly. But to my delight, we actually, what we actually saw was, the deal flow in that period
More transactions.
was incredible, right? And to be honest, I think it sort of slowed the overheat on valuations. We were seeing a lot more reasonable valuations because what we were seeing in 2019 was sort of getting out of hand with the way.
2019, early January, February this year, I was saying, I said, what, 4 million?
Yeah.
How much? How much? 2K. 2K was like, how?
Yeah. Those valuations were getting out of hand. So I think the combination of what's happening on the FX side, what's happening with just the economic impact of COVID, I think you are seeing some. So this is the time to be in the game, really. In my view, it's the time to be in the game.
Somebody's asked us straight up. It says, how many of Kola's 52 deals have paid out or successful?
So so my portfolio is up in aggregate. My portfolio is trading at fantastic returns, economic returns on paper. In terms of
lucky you.
Yeah, in terms of I'm not one to dish out numbers except you want to invest in our fund. In terms of cashing out, Paystack is one, money in the bank, and we have turned down a few secondary transactions. There is casualty out of 52 investments. There are 6 companies that are dead, and probably another 20% of that portfolio is sort of tracking at low performance, and the rest are performing really well. Our portfolio constitutes companies like Piggyvest, Paystack, Kudi, Reliance, HMOM, DAS. So I think on the balance of scale, for an early fund like ours, you're going to see a lot of companies that are still, at the early stages of exiting. And I think this emphasis on exits is a little bit too premature for a market that is less than 10 years old. Like, we need to all just relax a little bit more.
Olumide, I said you say, finish that sentence for him, please. I said, finish that sentence. Exit
I said, I'll start paying
majority.
dividends or what?
Well, hey, look, I've got to tell you, no, seriously, I have a startup that paid dividends.
Yeah.
Because they just reckoned, they looked at 2 options and says, we're sitting on a ton of cash, okay? Even if we meet all our growth needs, we're still going to be sitting on a ton of cash in a year from now. Dear investors, it's not what you put in, but so you know what we're doing, here's some of it back.
Sure.
I freaked out because are you guys crazy? How can you be giving money to investors? By the time they showed me the strategy and the paperwork, I shut up. And I've shut up ever since. And they're still, it's in the middle of COVID, they're going gangbusters.
Didi, I'm getting my first. I'm getting my first dividend check this Christmas. So, let's just thank the God of Christmas for
there you go.
So
please, guys, don't knock dividends. Right. I'm going to come back to the VC question. Has VP done or considered diaspora investment deals, and can you share that? What's the size of the average? We've done that. Traditional Nigerian investors find dividend yield payments. We've done that. Hello, what's the process for investing in ventures platform fund? Hey, looks like you got an LP in the audience.
I guess the simple question is, we can take that off camera. I've just put my email.
Do you want to put your account number in the chat?
I've just put my email address in the chat group. You can send me an email. Would love to talk to you as well regarding the VP fund. Thank you.
Fantastic. That's a very interesting question on traditional Nigerian investors find dividend yield payments. Do you plan to access Nigerian HNIs or foreign investors for funding and co-investment? I think that's a very interesting one because
please go ahead.
I'm seeing a lot of especially I have a lot of older friends, they call it bonds, who are HNIs, and they're saying, hey, Olumide, I'm seeing what's happening in this your startup scene. Don't let me miss out. Don't let me miss out. Come and take this 10K. Come and take this 20K. I'll come and take this 30K. Next time you're investing, let me know. So I think, and it's what we've always said would happen. Some of the exits happening would obviously propel and trigger that interest in companies, and we are seeing that starting to happen. So the foreign, the HNIs are getting attracted to it. In terms of foreign companies, we are also getting a lot of interest. I saw a very interesting tweet by PG for Graham in Y Combinator saying investors in Silicon Valley are going to be scratching their heads saying, what did Patrick Collison of Stripe see that we haven't seen yet in Nigeria? So that obviously gets everybody kind of thinking. The Kuda Bank deal was done by investors who had not invested in Africa or Nigeria before, and now they're interested in the market. That will get other people also interested. And I think the combination of foreign companies investing alongside the locals or even local HNIs is a recipe for success in many of the companies. So when I take money from some of these investors, especially the local HNIs, it's like, I've taken this money from you, don't disturb me, or don't start calling me and asking me for any dividend payments or whatever. If you have
or report.
But remember that you have given me this money. Forget that you have given me this money in your head, because I know the kind of, they are used to, I buy for 5 naira, I sell it for 10 naira, I've made 5 naira. Those are the kind of transactions they've been used to. But then that education about the process is always happening now.
Okay, thanks for that. I mean, I was going to take the 2 VC questions together. A third one's come up, simply because I know we have both angels and VCs in the room. And I'm going to read them out and then we can talk about them. The first says, we have a pipeline of 15 startups with great potential currently in our data room. What's your strategy with working with other VCs? Question number 1. A similar, hello everyone, I'm Adetai Olowu from Enovo Growth Africa, a VC based in Nigeria. I want to ask a question with regards to what you guys do to support VCs here in Nigeria. Do you co-invest with VCs or invest in VC funds? And the third and final one was, okay, I thought I saw a third one. Oh, it was VP, was Ventures Platform, sorry. Right, so, I mean, Olumide, you're an LP in a venture capital fund. Kola, you're a GP in a fund, okay? And on this one, I'm the newbie. I'm the new kid on the block. I'm just about to start raising a fund, so I'm going to come and learn from both of you. But how do you work with VCs?
Yeah, so we co-invest. We love to co-invest because it's nice to share the risk. We literally have a list of co-investors that we reach out to when a deal is undersubscribed, which these days is becoming rare. The good deals tend to be oversubscribed. So we co-invest. I don't invest in other funds, obviously. Because I invest in my own fund, and that's basically the answer. But happy to co-invest. I've just put my email in the chat. Please send me an email for the person that has 15 startups. I'm looking for startups to invest in every day. So please reach out as well. Let me add something.
Do you want to? Yeah, I was just going to ask. Yeah.
I think for me, it's investing in VC funds that like BP that I know align. So for example, align the kind of thinking and that of what I would have personally done. So for example, Kola can tell me, hey, Olumide, there's this deal that we are doing. We are putting 20K. I need 10K from you. I'm not looking at the deal because Kola has looked at it. Like it's almost as good as if I'd looked at it. So is working with VP fund. I think that's the only fund I'm an LP in, and then doing the angel deals on the side.
Fantastic. Right.
I have to say, Olumide has been an LP with me even from when we didn't know what we were doing. So
all right.
Yeah.
Oh, that is so cool. Well, here's another one for you. What are the KPIs you look at in a startup post-investment?
So typically, the metrics would differ by company. The metrics are never standard. So we tend to we tend to set joint metrics with the company. And for us, it's really about tracking the performance to plan. Obviously, more time than not, performance is sometime in some cases will exceed plan, in some cases will come under plan, and which is why the reporting is essential. So for us, the question that I often get is, how do you enforce reporting? Our portfolio companies know that you only get access to portfolio support if you report regularly. So there's a quid pro quo relationship from that standpoint. So metrics differ company to company. The best performing companies that are in my portfolio are very clear on the one metric that matters. They're not chasing ghosts, and so I think it's very customizable company by company.
All right. Olumide?
Yeah, I'm back.
Yeah. Okay,
Sorry.
welcome back.
Both power and inverter failed. Maybe it's just one startup with
Okay. Well, I did promise that we'd wrap this up as soon as I could. I am wondering if there are no more questions from the audience, and I had thought people like Dipo would be asking away because he was part of the team that wanted to put this into words. But having said that, what are your, let me put it this way. We set this up because what I am personally trying to do is to expose high net worth individuals and angels to the fact that the traditional, the classical angel investment model, let's go through a pitch. From the pitch, we do the deep dive, then a due diligence, then we start negotiating, and finally, maybe at some time within a 6-month period, we cut you a check, and then we start working with you on mentoring and all of that. That classical model is broken. What doesn't work on the continent, and we've seen that. The first person I put in front of this audience was the Launch Africa group led by Zach George, and then we've heard from Inya Boyaji, Future.Africa, and so it's heartwarming today to hear from Ventures Platform and to let people know that, look, this is a very, very credible venture fund that's operating in Nigeria. If you have 100K and want to play in this space, then I couldn't think of better people, okay, to co-invest with, and that's why we're having this particular conversation. And if you don't have that size ticket, then let's talk all the same, because we're doing small deals all the time. We're constantly syndicating across borders. So, and our syndicates don't know whether you are from Rising Tide or LAN or this, or, it's like, is this a credible founder, and, does it work? And all of this is an effort so that by next year, we will move into what you guys have been doing with OO and others, which is a credible intro. So Olumide brings something. Guess what, guys? We've got 5 days. Anybody within the network, and they're accountable for what they bring. So that's sort of where we're trying to get to. I really want to hear very last words and very last thoughts from each of you on this, our angel investing space as it's evolving. What do you see next year? Let's start with you, Kola.
Yeah, first off, TD, I want to say thank you for this opportunity. I think it's long overdue. And I think, if anything, there's so much potential that lies in the angel space. But I think angels, we all have to realize that the game has changed. The world is now on alert. Founders now have more access than they ever did. So if you don't invest, other people would invest.
Correct.
About a couple of years ago at TEDx, I asked the question, who will own our future unicorns? And the answer to that question is still unanswered, right? So, I think we've got to view, as angels, we've got to view the relationship more as a partnership and less as doing the founders a favor. We've got to ensure that we lighten the burden And I think we've got to also build bridges. And so as VP, we're open to talk to folks that want to be LPs. We're actually right in the middle of a raise at the moment. I know I did mention a minimum check size of 100K, but we're happy to engage with folks that are strategic. So please send me an email. But also there are co-investing opportunities. You don't have to invest in our fund. Obviously, there is a premium for the deal flow, right? Olumide, so I always hear people saying share deals, share deals. I mean, I love to share deals, right? but there's a whole system in getting the deals, and so that's why this is a business model. So it's a pleasure to be here. I think that you would see what Paystack creates is another layer of companies. We just invested in Mono. Olumide is invested as well. Mono wouldn't be on the scene today if you didn't have Paystack. And so I think we're now entering the next layer of our digital economy. And so it's time to really, get in the fray. Thank you very much.
Thanks a lot, Kola, for that. Olumide?
Yes, again, thanks, PD, for putting this together. And I think some of the key takeaways, like you said, is with the velocity of deals we are seeing in our market, speed has become a currency in terms of doing those deals. And Kola mentioned Mono recently and when he was talking, and I think the Mono deal probably raised 500K probably in the space of a week or two. So you're finding good founders would find money in our market easily, very, and because of the kind of companies that have been built, ex-staff of those companies are going ahead to do very interesting things, and they've built a reputation from those companies, be it Jumia, Paystack, and they can raise money quite quickly, and because it's already even happening in our market. So speed has become a currency. Angel, people who also want to invest also have to, you're investing equity, you're investing in those companies. It's not a loan. Like I know a founder, one of the founders we backed, and was calling me and saying the person that invested in his company is asking him when am I getting my money back this year? Like he's not doing again. It doesn't happen that way. How do you support these companies to grow? It's very, very early days in our market. We still have a long way to go in building some of these companies. So we'll be patient with these companies. We need more people in that space to build these companies, because when the exits happen, and they're already even happening, and more of them will happen, the funding or those funds stay here, and they can go into building other companies in our market. So the more people who get involved, the more that money stays here to build more companies that can help develop our nation. So thank you.
Thank you very, very much, Olumide. Well, dear audience, I thank you. I hope you found this as informative and as useful as I have. I thought rather than do a masterclass, to have a conversation with you about angel investing. And what did we cover today? Well, we talked about sourcing. And in discussing with both Olumide and Kola, what we discovered is that really you earn your stripes to get the right kind of sourcing. So it's when you've done deals and when you're known in the ecosystem, then surprise, surprise, the deals come to you. Sure. We also found out that when it comes to assessment, it's all about the founder. It's not about the pitch. Yes, the team's important, the business is important, but really the focal point of your assessment as an early stage investor is, can I work for this founder, to borrow Kola's terms? And I think that sort of crystallizes it. If I can work for this founder, then I can invest in him. And then, of course, when it comes to actually doing the deal, we talked through everything from term sheets to due diligence, from negotiation, but the offshot of it, like Olumide said, was speed, okay, has become a competitive advantage. So in doing the deals, it's all about the speed. And finally, on post-investment, which is pre-exit, it's about adding value, okay, in terms of portfolio management. They worked assiduously with the regulators to make things happen on behalf of Paystack. That's what angel investors do. So when the exits do come, as they have for Paystack, whether it's 30x, 50x, or even 100x, you know it's something you have earned. And the point of all of this is there are African founders who are solving significant problems by using technology and innovation for solutions. It is the people who carefully select and back those founders, okay, that will be creating value and therefore getting the benefits of returns in our new environment. I thank you very, very much for listening. My name is Tommy Davis. Thank you and goodbye.
Thank you, everyone.
Take
Bye,
care.
everyone.
It was fun.
Yes.